Hey everyone, Bill Constane, Freedom Wealth TV, and what a day. Happy Monday to you. I know a lot of the stock investors and oil investors around the world are not too happy, but we're going to cover the markets. We did see a big correction, and some people even anticipate a crash at this point in the marketplace. We're going to go over a couple of articles. We're going to go over some solutions. So if you like this type of content, make sure to like and comment, positive comment, subscribe, and hit that notification bell. Okay, so let's look at Yahoo Finance. Um, and looks like the market closed right now. It's about 5:30 Eastern Time, Monday. This particular article just came out, down 225 on the S&P, down 7.6%. On the Dow, down 7.79%, down to 23,851. The Nasdaq down 624, down 7.2. Right across the board, we're seeing about 7 to 8%. The Russell 2000 down 9.3% one day. And the big one is crude oil down to $30.24 per barrel, down 11.04, down 26.74%. Those numbers were even bigger intraday. So, well, there's Warren Buffett talking about value. He's definitely buy and hold. Now, again, I'm going to tell you the rules for accumulation and distribution, from my view, are dramatically and drastically different. When you're younger, in your 20s, 30s, 40s, maybe 50s, you can, weather the storm. You can wait. You can beat the market. I mean, 7 to 8 years out of 10, the market is going up. 2 or 3 years out of 10, typically the market goes down. But of course, when you're in retirement and you need to pull money out every single year, sometimes you're taking that money out on big down days, big down years. So it's something to just be aware of. So the strategy of buy and hold, it definitely works. But if you have to start pulling money out to pay for lifestyle, it's something to think about. And also health wise, can you take the roller coaster ride of the ups and downs? So people say to me, well, if I don't do that, what should I do? Just get into cash? Can I just be in the market and make no return? And I say, no, that's not a great solution. There's a way to have it all. I'll explain that to you towards the end of the video. Now let's continue on. Now, the world's faltering effort to contain, yes, the virus, I'm not going to say the whole word, led to a rout in stocks and crude oil and so forth. The decline marked the largest one-day point loss for the Dow on record, and that's by far, and the largest single-season percentage hit since 2008. So a tremendous down day. The S&P 500 more than 7%, as we outlined, led by stunning declines in the energy and financial sectors. My question to you, and you can comment in the description here, is at the beginning. Where do you think the market's going from here, ladies and gentlemen? Is it going to stay flat for the rest of the year? Is it going to go up? Is it going to go down? What are you guys thinking? Are you even participating in the stock market? Are you buying at these lower levels, or are you selling? What are you doing? Okay, so you can see the article here. Worldwide cases 109,000, with Italy emerging as the worst hit country outside of China. Brent crude prices collapsed, falling by more than 30%, recovered a little bit by the close. OPEC's failure last week to strike a deal to cut production prompted Saudi Arabia to lean in aggressively on cheaper oil prices, which fanned concerns about a full-fledged price war that sent oil into free fall. All right, well, the epidemic has stoked fears of a sharp global downturn, which have in turn weighed heavily on major benchmarks and crude oil. Well, they went out big time. The sky is falling, he said. Other analysts agree that lower oil prices ultimately represent a downside risk to the domestic economy. All right, while declining oil prices might add billions in disposable income to consumers' wallets, obviously saving money at the gas pump, which we all don't mind, a more cautious consumer in the current environment is likely to pare down the upside effect from lower oil prices in the near term. So it may be a great buying opportunity. Time will tell. So there's your article there. Okay, and there's the channel. Let's see what we got here. That's what I wanted to show you. Okay, market watch. Stocks will fall into a bear market if the Dow and S&P 500 close below these levels. This is market watch, and that was at 5:15 p.m. So right now it's 5:38. This article just came out. Equities on cusp of a bear territory as investors mark bull market's 11th birthday. So I've been saying for a while, in my humble opinion, I think we're overdue for a serious correction, maybe a crash. It was just an unprecedented bull run. So there's that little bear cub showing his head, and it certainly showed its head big time today. A birthday party for the longest bull market in U.S. history. So people getting pumped up, getting excited. You know, I always say when your gasoline attendant and your waitress are telling you to buy stocks, it's probably time to sell. And that's what happened. So a couple of weeks ago, I said in a video, I said you may want to start putting an umbrella of protection around some of these gains, and you can do so with some very, very unique strategies, which we'll uncover on one of our websites here in just a few minutes. So the bull market turns 11 on Monday, and I guess we've got some birthday punches for the market because that's what happened here on its birthday. Can it outrun the particular virus stock sell-off? A bear market is widely defined as a drop-off of 20% from its recent peaks. Right now, we're right about 19%. Stocks had dropped into correction mode, defined as a pullback of 10% late last month as fears over the economic impact of the virus outbreak began to rise. And by the way, I'm not an alarmist. I actually think it's overdone. I actually think it's been sensationalized, but the panic is real. And how does it impact people's behaviors and ultimately the bottom line for companies and business owners? I think we're starting to see the beginning of the impact of people canceling flights, canceling cruises, canceling events, concerts. So not only are people staying quiet and staying in their homes, but then they're not going to spend money at the local restaurants, the local bars, the local malls. So little by little, that trickle down effect, I think we're just starting to see it. And again, just my perspective after being in the market and as a business owner for 25 years and the CEO of Freedom Wealth Services, just my informed, educated opinion. So here we go. Stocks fell sharply Monday, triggering the so-called circuit breaker that temporarily halted. This is reality. So the market actually halted, stopped trading. The S&P saw a daily drop of 7% in early trade, basically stopping the bleeding. The decline left the S&P 500 down 18.9%, so just below that 20% mark as I discussed, from its all-time closing high, finishing at 2746.56. The Dow Jones Industrial Average dropped over 2,000 points. Yes, 2,000 points in one day, or 7.8%, to end at 23,851, down 19.3% from its record close. So a lot of people know at 20%, that's kind of the number that goes into crash, in that crash territory. So you're going to see lots of people kind of defending that line, I think. So we'll see what happens tomorrow. Maybe we'll get a bounce back tomorrow, or maybe we'll have that market continue to sell off. We will see. But if we break 20, we could very, very quickly go to 25 to 27% down off those highs, in my perspective. The bull market turned 11 on Monday. Not a happy birthday, unless you're actually investing and trading on the other side of the marketplace, or if you have locked in gains with guarantees, marking the anniversary of the March 9th, 2009 low from the S&P 500 during the financial crisis. So that's pretty much it on both of those articles. I want to take you here to the solution to visit, and you can send an email out to me. You also can give me a call direct at Freedom Wealth Services. Learn the proven strategies used by the wealthy. So if you're in your 50s or 60s and you're looking to retire pretty soon, or if you're already there in your 60s and 70s and you're saying, Bill, how do I just put a wrapper around this? How do I put an umbrella protection? How much money can you afford to lose? That's the question. So does it make sense to diversify at least some of it and know what you're going to get? I think the panic, I think the ups and downs, the energy of just looking at the market go up and down in retirement is a heavy burden. That's my opinion after seeing it for 25 years. I believe in the stock market, short, midterm, and long term. But when you're working and creating income, when the market goes down, you have that sense that, hey, you know what? Market goes down, I'm going to average my cost down, cost average, and actually buy lower. You feel like you can conquer it because you're working, you're in business. But when you get closer to dial down and you're not working anymore, or you're getting close to retiring, you say, this is the money that's going to pay my bills. This is my lifestyle. I'm not going to work anymore. I can't afford to lose money. I can't afford to go up and down. So, and what about heart attacks, strokes, and having anxiety, asthma? Having these ups and downs doesn't help people that are in their 60s, 70s, and 80s while you're thinking, I'm going to take money out, but I'm down. This is a perfect example of why I say protect your money. Make sure you can get the upside of the market. So I'm not saying go and buy bonds at these low levels, go into cash, because that's stressful. If you go into cash right now and the market booms up, you're going to be upset. You're going to say, I can't believe it. I actually sold at the bottom and now it's going back up. That's another form of stress. What if there was an opportunity to give you a zero floor, meaning you couldn't lose, you get the upside of the market when it goes up, but when it goes down, you get none of the downside. That absolutely exists. We have special programs for people that are in the accumulation stages that to be able to show you how to do that, and then for people that are in the distribution. So I want to encourage you, visit freedomwealthservices.com. You actually can see my 4-minute video. You can watch the videos my staff has put together. You can see some real life scenarios. You can learn at your own pace. And we can see how your numbers look. There's me, and there's some of the staff that does a fantastic job. Let's click the wealth strategies here. Okay, and there I am, Bill Constantine, president and owner. You could see some of the resources, recommended articles. So I'm here to educate, okay? So I'm out in Florida, but I do business throughout the country. Happy to help. If we're not appointed in your particular state, we certainly can do that. We certainly can point you to an advisor that is appointed and licensed appropriately in your state, but start with a phone call, start with an email. We can point you to some of these great articles. Can your 401k account be too big? 6 most important wealth building lessons from multimillionaires, the retirement revolution that failed and why the 401k isn't working according to Yahoo Finance. 45% of Americans pay no federal income tax. So if you're in the accumulation years, I'm just telling you, in your 20s, 30s, 40s, 50s, we can show you how to shelter yourself from all of the losses, get the upside of the marketplace, grow your money tax deferred, and take the money out tax free and have a whole bunch of benefits that you never dreamed that you could have had. If you're in the later stages where you're already in retirement or approaching retirement, we can show you a lot of those strategies as well. So there's not a one size fits all, ladies and gentlemen. As I said in the beginning of the recording, the rules for accumulators and the people that are in distribution are far different. Too many stockbrokers, mutual fund managers, in my view, treat everyone the same. One size fits all. Ask yourself a question. Aren't you a unique person with a unique set of circumstances and needs? If you agree, make sure you like, comment, subscribe, and reach out to me. Be happy to help. So that's it for right now, folks. It's Bill Constantine. Stay relaxed, don't be stressed, and take action. Take action for the next phase of your life, and we're happy to help. And then tune into our next video. Have a great one. God bless you and your family, and we'll see you soon.